Right, bank reconciliation statement we are going to talk about. Okay, now business organization. Okay, business organization. Okay, bank is a business organization. What is the business of this business organization? It accepts the deposits and it advances the loans. Okay, who are the people involved in this transactions? Bank, when you're talking about bank reconciliation statement, who are the people involved? Okay, it is the businessman and it is the bank. The businessman prepares the cash book. Okay, the bank prepares the passbook. Okay, the bank prepares the passbook. Okay, now the cash book debit balance means it is favorable balance. The passbook credit balance means it is favorable balance. It is favorable balance, right? Okay. Now look at this cash book. 1 lakh, 1 lakh deposited in the cash book. It is debited, right? And 20,000 is withdrawn, that is credited. The remaining balance is 80,000. 80,000 is the debit balance of the cash book. The same in the passbook is different. How? Look at this. When you deposited 1 lakh, it is credited in the passbook. Look at this. It was debited in the cash book. Okay, it is credited in the passbook, right? Then out of that 20,000 withdrawn and that is debited, right? Remaining balance is 80,000. 80,000 is your passbook credit balance. Passbook credit means favorable balance. Cash book credit mean cash book debit means favorable balance. This is what we understood. Okay. Now the opposite is overdraft. Cash book, cash book. Yeah. You have deposited 80,000, right? And you have the opposite is, yeah, simple words. The opposite is overdraft. Okay, right. Now, what are the reasons for the mismatch between the cash book and passbook? Right? Reason number one, checks deposited but not credited or collected. Checks deposited but not credited or collected. When you deposit check, it is entered into the cash book. Okay, let's say 10,000 recorded. Okay, 10,000 recorded and it is added. Okay, by debiting, right? Then the same is not presented. It is supposed to be recorded here, but it is not recorded. It is not recorded. Okay, it is not recorded. Look at this one. This is not recorded. It is supposed to be recorded, but it is not recorded. Check is deposited. When a check is deposited, cashier debits to his cash book. But the same did not reach the banker, or the banker still to get the money. Therefore, he did not record it. He did not record it. He's waiting for. So what is that called? Checks deposited but not credited. But not credited. What do you do with this amount? Okay, if cash book balance is given, you will reduce it. If passbook balance is given, you will add it. Okay, and the reverse is done if it is overdraft, right? Next, checks issued but not presented for payment. When checks are issued, let's say 10,000 checks worth are issued, right? Now when it is issued, it is credited to the cash book. The same is debited to the passbook, debited in the passbook, right? Now when checks are issued, it is recorded here in the cash book as a credit, but the same is not recorded here. The same is not recorded. Why? The fellow did not go to the bank. This fellow did not go to the bank yet. After 1 week, after 2 days, I'll go. But before that only you are preparing bank reconciliation statement, right? So by the time this check of 10,000 did not come to the bank. So therefore the banker did not enter it in the passbook. So therefore this is missing. When it is missing, what you have to do, yeah, because of this credit, the cash balance is reduced. So you add back. If cash balance is given, if passbook balance is given, okay, if passbook balance is given, you have to deduct this. You have to deduct this, right? Okay, if it is favorable balance, if it is unfavorable balance or overdraft, you have to do reverse. Okay, overdraft, when you're issuing check of 10,000, right? What happens to the overdraft? Overdraft will be increasing. Overdraft will be increasing, right? Reduce the balance of overdraft as per cash book by deducting this 10,000. If overdraft as per passbook is given, okay, when check is, if this amount worth check is not presented with the bank, what happens? It is not yet deducted. It is not yet deducted, right? Therefore, your overdraft is less. Deduct it now because you didn't deduct it, right? So that the overdraft is on par with the passbook. Overdraft, or according to passbook, is on par with cash book, right? You're supposed to deduct, you did not deduct. Therefore, you deduct it now so that the passbook overdraft is on par with the cash book overdraft. If passbook overdraft is given, deduct it. If cash book overdraft is given, add it. All right. Next, direct deposit by the customer into the bank. What happens? That is not debited to the, that is not debited to the cash book. It is to be debited, but this is not debited to the cash book. But the same is debited to the same is debited to the passbook. Look at this, 3,000 debited to the same is credited in the passbook. It is recorded in the passbook, but the same is not recorded here. Okay, so there is a mismatch. Passbook balance shows more by 30,000, cash book balance less. So when cash book favorable balance is given, you add this. When passbook balance is given, you have to deduct this. Okay, and if it is overdraft, you have to do the reverse. Okay, you have to reverse. Next, interest dividend collected by the bank. Okay, when it is collected by the bank on behalf of the customer, directly it is deposited in the bank's passbook on the credit side. Okay, on the credit side, and it is not recorded on the cash book debit column or debit side, right? So if cash book balance is given, you add this. If passbook balance is given, you have to deduct this. If it is overdraft, do the reverse. Next is interest bank charges levied by the bank. When interest is an expense and those expenses are as good as, withdrawals, let's say 500 are the charges. 500 charges are appearing here. 500 charges are appearing on the passbook debit side. The same is supposed to be appearing here. Okay, but this is not appearing. This is not appearing, right? This is not appearing. So when it is not appearing, you have to deduct it. You have to deduct it from the cash book favorable balance because it's deducted in the passbook. Let us say if passbook balance is given, right? If passbook balance is given, since it is not deducted in the cash book, okay, so you don't deduct it. You don't deduct it. You add it back, right? You have deducted it already. You add it back. Next, last and final one, payment against standing order of the customer. Payment against standing instruction of the customer, right? When payments are made, what happens? Okay, what happens? You will credit in the cash book. Okay, you will credit in the cash book. But actually what happened? You have given the order, but you forgot, okay, that order. Okay, you don't remember that. But the banker say taking your order instruction, he has sorry, this is to be debited. The banker has debited 20,000. He made all your payments on your behalf. He debited 20,000. But you're supposed to credit in your cash book. Okay, but you didn't do that because it's still not known to you. Okay, this figure is not known to you, cashier. So he didn't credit it, right? So this is not credit. When it is not credited, what you have to do? It is not credited, it is to be deducted. You didn't deduct it, so what you have to do, you deduct it, right? If cash book balance is given, if passbook balance is given, since the cash book did not deduct, you also don't deduct it. Okay, you also don't deduct it, you just add back again what you have deducted, right? So these are the major issues in the bank reconciliation statement, right? These are the major issues, right? It was 8, now I have made it into simplified even further 6, clubbed some of the issues. Now ask me if any doubts here. I must clarify you.